Hello everybody, how you doing? Again, this is Jason Rod at Let's Talk Mortgage. I just wanted to go ahead and briefly talk to you and let you know what's going on with a very cool product that we have. It is called a closed-end second mortgage. So with this, I'm going to go into a blog post that we published today. And with that being said, let me go ahead and just take you through our intro. Thanks. Well, welcome back, everybody. Let me go ahead and bring up what we're going to be talking about again. This is our close-end second mortgage product, and it's really important to, one, understand the product, and two, to understand the pros and cons and how you can relate to your personal situation so that this can work for you. Now, I want to go ahead and bring up our blog post just to kind of bring that up for you quite quickly, and here we go. So, what a closed-end mortgage is, closed-end second mortgage, and how does it work? So as it states here, a closed-end second mortgage allows homeowners to release up to 80% of their home equity, which is 85% with myself at MBANC, without impacting the interest rate on their first mortgage. Now, these loans are called closed-end because they provide borrowers with a lump sum of money up to $500,000 of a one-time payment. And this amount that you receive depends on your credit score, your income, your combined loan to value, and there are a few other qualifying criterias, property type, things of that nature, investment property, and how you're structured, which professional banker or loan officer like myself or any of my colleagues can definitely walk you through, okay? And a lot of people are using this to go ahead and pay off debt, purchase other property and finance education, renovate their home, medical expenses, or maybe even take that dream vacation or pay for a wedding for their family. Because the idea behind this product is that we're going to go ahead and take the money out at a one-time lump sum payment versus a HELOC that in the majority is a variable rate. This is a locked rate in this product, and it allows you to really keep your first position of your mortgage. So let's say during the pandemic, you went ahead and refinanced or purchased a property, and you're holding on to a really low interest rate that you really don't want to let go of, but you are holding a considerable amount of equity in there, be it that if it was from an equity gain, you're in an appreciation state, something of that standpoint, or it is something where you just have had the loan for a long time and you have a lot of equity that you want to access. So this is a blog we posted today. It's about the pros and cons of closed-end second mortgages for self-employed borrowers. Now, myself as a non-QM lender, I specialize in helping people who are self-employed. I look at their income a bit different. I do require no tax returns, or I don't require tax returns, which is the better way to say that. But definitely we can do a conventional loan that way as well. But speaking for people who are self-employed or have investment properties that have great cash flow and you want to access this equity, this is basically what this article talks about. Now, I'll read it with you just to go ahead and go through it so that you can have you can hear someone go through it with you, and then I'll have some talking points along the way. So, in the current economic climate, to access equity in their homes, many homeowners look for refinancing options that allow them to keep their low interest mortgages, which is what I just mentioned. So we had an MBANC client, he's a self-employed entrepreneur. Joshua purchased his property in Los Angeles in 2017, and his equity increased over 70%. So congratulations, Joshua. First off, great purchase. Good for you. He came to us here at MBANC because he wanted to leverage his real estate equity without compromising his low interest rate. So if you're a savvy homeowner like Joshua and secured your property when the interest rates were low, you may be looking to access equity without sacrificing your interest rate, which is kind of what I just completely went through. So one of the options you might not be aware of that's available for you, it's called a closed-end second mortgage. It's a cash out refinancing or a HELOC. So what are the differences? What product works best for you as a self-employed borrower in the current economy? This is a basic guide on our experience with clients like Joshua and yourself. So we're just going to kind of break it down in this article a little bit more detailed. So in the description, you'll see I copy and pasted what it is. So a closed-end second mortgage allows homeowners to release up to 80% of their home equity, 85% with our institution, without impacting the interest rate on the first mortgage. So these loans are called closed-end because they provide borrowers a lump sum of money upfront up to $500,000. Now, the amount you can receive depends on your credit score, income, combined loan to value, and other qualifying criteria. You can use that money however you want to either pay off debt, another property, financing education, renovate your home, pay medical expenses, whatever it may be. It is your money that you have access to. Now, how you repay the loan is really important to understand. So, no, you repay the loan amount in monthly installments over a specific loan term. Usually in the standard market, you're going to go ahead and see it from 5 to 15 years. We do it over a 30-year term here at MBANC at a fixed interest rate. It doesn't float, it's fixed the entire time. So you can understand what exactly your payment's going to be monthly. And when you're qualifying people off their income or even their business income, this is really important because you got to be able to afford the payment, right? You might have a bunch of equity that you want to access, but according to your debt to income ratio, it's not going to work out for you. So being able to navigate that and figure out that number is really, really important. So with a fixed rate, you can count on exactly what you need to budget for monthly, which a lot of people get a warm fuzzy, in their heart when that happens. So on the closing second mortgage, it's just an addition to your first mortgage payment. Now, there are nuances in this, which would be that if you have all of your impounds on your first, or if you have solar, there's some additional questions I would have for you. I could go into that further on the next time, or drop it in the comments, and I'm more than happy to go over this with you. Now, what about HELOC and cash out refinance? So this is important to discuss because about being transparent and being a thought and providing thought leadership in this process is really about the pros and cons. You got to look at it both ways. You got to look at both sides of the coin, basically, is the way to say it. So what about HELOC and cash out refinance? There are several financing options available if you want to access equity in your property. What are the differences and which one's really going to speak to you? What's best for you? A home equity line of credit, a HELOC, is a revolving line of credit that's guaranteed by the home equity, which means the equity or monies that you've already paid into the property. So you can repeatedly draw off of that and you get approved up to a certain amount, and that's what a HELOC is. A HELOC works best for the homeowners who want to keep drawing money as needed, such as ongoing tuition payments or home upgrades, whatever it may be. However, a HELOC typically comes with a variable interest rate, and you need to qualify for a HELOC. So most traditional lenders require tax returns, which may not be the optimal option for self-employed homeowners. So if you are self-employed and you are taking a bunch of depreciations on your taxes and not showing your true cash flow, that's where you're going to run into that problem. And one of the solutions we have for that is that we qualify you off your business cash flow gross, right? We'll back out an expense factor and use the rest as qualifying income. So it tends to give you a lot more bandwidth to qualify you off that versus after you depreciate and have a bunch of write-offs on your taxes, very simply. So now talking about a cash out refinance, it's a type of loan that replaces your first mortgage with the bigger mortgage on new terms, such as a new interest rate. But like on a closed-end second mortgage, it allows a homeowner to get a lump sum of cash. But because it is replacing your first mortgage, it comes with closing costs. And like with a HELOC, you'll need to qualify for it. Considering current interest rates and qualification requirements for self-employed borrowers, cash out for refinances may not be the optimal option for you. So let's say you're like, oh, I just want to do a cash out refi, but you're gonna be coming to a position where you're dealing with today's date rates today and other things of that nature versus holding on to your first position. So why would you leave something so low and go to something higher? It just really doesn't make that much sense. So it's about navigating the loan program to see what makes more sense for you. And I'm really kind of hyper focusing on the self-employed individual. Now, this definitely does work for people in the conventional space, W-2 earners, not an issue, but a lot of times your debt to income ratios that you could go to in conventional banks being, your neighborhood bank that you bank with. I won't drop any names so the video doesn't get any hits on it. But the mainstream banks you might see on your corner that will require your tax returns, and after you depreciate and have your write-offs and whatnot, you're not showing your true cash flow. So that's why it's imperative that when we're looking at self-employed borrowers, that you want to know that you have options to be qualified off your gross income. And that goes for many streams of non-traditional income earners, be it a 1099, self-employed, if you're getting annuities, or let's say you have high net worth and you have tradable securities. There's different asset utilization platforms that we can use. And being a direct lender, it's really easy to navigate those products so that we can help people out. Now, moving on in this article, it says if you're a self-employed homeowner who does not have traditional sources of income, like I mentioned, you need a lump sum of cash fast while preserving a low interest rate at your first mortgage. On your first mortgage, a close-end second mortgage may be your best option. Now, people say, well, I don't want to take out $500,000 and increase my payment, this and that. Well, there is a cash on cash aspect of when you think about this, because it'll cost you a certain amount of dollars to take out that loan, right? And then you have a monthly obligation and you might not need X amount of dollars out of your equity. Now, my mindset on this, and please comment if you have any other questions or comments on this. I'm more than happy to engage with you. But if you're in a position where you might only need $200,000, do a home improvement, redo the kitchen or build a porch, put in a pool, pay for college, whatever your situation that I possibly mentioned earlier is, what would I do with the additional 100, 200, or 300,000, right? Well, a lot of my clients are actually making their money work for them. They're buying treasury bonds, and they're doing things, they're investing their money elsewhere so it can actually make money while it's in there. Obviously, there's a cash and cash metrics that you use in this space to see how much you'll actually be yielding, but that'll be a topic for another day. But there are ways to utilize this income so that you can go ahead and, make your money work for you. Why should it sit in your house and not do anything? Just an idea. So let's talk about this. Oh, it's a nice house, by the way. Look at this house. I can see myself swimming in that pool. A little more modern than my feel, but I definitely do like it. So pros and cons to close-end second mortgages for self-employed borrowers. And remember, this article, again, is hyper-focusing on self-employed borrowers. So what are the main pros of the close-end second mortgages? And let's bullet point this and go down this right here for you, okay? Where is my mouse? There it is. Okay, you can tap into your home's built-in equity and turn it into cash, one. You can keep your first mortgage terms, and again, let's say this here, let's keep your first mortgage terms, such as low interest rate, and have a predictable monthly payment. As a close-in second mortgage comes with fixed rates. And this is an incredible aspect to it, because I personally am a person that likes to go ahead and know how much I owe monthly and not depend on the government or whatever is influencing the market to go ahead and tell me you pay more, you pay less. And I just do my expenses a little bit differently, and the way I think that most people should is count on a number every month that I'm going to be obligated to, so that I can make sure that my commitments are there, and just being a responsible homeowner. So You can use cash for almost any expenses: debt consolidation, education, home improvements, unexpected expenses, etc. If you have questions about specific things that you're interested in, you can definitely reach out to me, message me here, and I'm more than happy to go through it with you and tell you if it works or doesn't. It is subjective to the scenario, so but it is a pretty darn wide blanket for you and able to go through this and utilize your monies where you need to. Okay. Now, if you plan to use a closed-end second mortgage for home improvements, which will increase the market value of your home further, the interest you pay may be tax deductible. And I encourage you to talk to your tax expert, someone outside of me. I don't claim to be a tax expert, but this is a very true statement. And due to your personal scenario, your tax expert will be able to walk you through what is and what isn't tax deductible. But it is something that could be, so it is definitely worth the question and a conversation with your expert. Okay, so what are the cons? Here's the devil in the details. What are the cons? What's everyone going to worry about? What do you need to look out for? Okay, this, you have to make payments on both loans at the same time. Okay, so the way it's stacked is, let's say you have your first position and you pay $3,000 a month, and then your second mortgage, you get that lump sum of money and it adds an additional $1,500. So now you have to be able to afford $4,500 a month according to your debt to income ratio, and then our combined loan to value will need to fall under that 85% ratio. So you have to make both payments at the same time, and I could get more into that, how it works. Just please go ahead and chat or comment, and I'm more than happy to cover that in my next video. But like with the first mortgage, if you fail to repay a closed-end second mortgage, you risk losing your house. So it is leveraged against the equity in your home, so it is secured to the asset. All right, it is just a second position. Now, when I talked about solar and things like that, we need to look into that so that when you have a solar loan, we actually would fall into third position, which doesn't work. But there are things that can be done, and we get releases and paperworks and exceptions in order to work with that. And that's one of the advantages, again, of working with a direct lender, direct to consumer, and with someone who is very familiar with the space and knows how to help navigate that for you, and with a situation solution mindset. So we're absolutely engaged in that. Now, when you take out a second mortgage, you reduce equity in your home, which might affect the ability to borrow against it in the future and sell it at a profit. So with that being said, when you're taking out the second mortgage, you are taking equity out for your home, because you're actually going to utilize that to either make money or pay off an unforeseen expense, do an improvement to increase the value of your home later. But these are numbers that we can discuss with you, go through it, and basically break down what makes sense for you. And remember, this mortgage needs to be wrapped around your needs, not just the program's rules and guidelines. You know, yeah, we all have rules and guidelines, but you know, how can I navigate it to make it work the best for you? And hey, sometimes we're going to shake hands and be friends. You know, not everything's a deal. Not everything makes sense, but the reality is that there's more opportunity for you than you think. And right now in the current market, there's more people sitting on the largest amount of equity, so scared to go ahead and access that and go into other investment strategies and investment blanking. Okay, so I'm blanking. I'm human. So other investments that they can go ahead and do. So it is important to understand that it's got to make sense. But that's what we do here, is that we work with you to understand your complete scenario so that we can work with you to have it make sense. Now, the amount you can borrow depends on how much your home, let me start again. The amount you can borrow depends on how much of your home you own outright. If you end up needing more money than expected, you can't reborrow it and you'll have to get another loan. So again, making sure it makes sense. We work through the deal. We're going to make sure you know what the limitations are, what you can do, what the risks are, what the advantages are, and do a lot of those metrics with you, because not everyone is super smart in this space. We're just thinking, hey, I want to go ahead and access this money that I have in there, and why is it so hard for me to access it? You know, as a self-employed borrower, again, we're going off your gross income. We back out an expense factor, and you get a lot more bandwidth than after you depreciate on your taxes, okay? And by the way, if I am doing you as a self-employed, doing your file as a self-employed borrower, I'm not going to require your tax returns, and I won't even look at them. All right, but that is subjective to the scenario, so let me just have a little disclaimer in that. Now, how to choose a closed-end second mortgage lender, and this goes across the board. Okay, I could go ahead and speak. This article speaks to what we do really well. This is what I can speak to. Other people might be out there offering similar programs and whatnot, but I think it's important for you to understand from a position of where we are at MBANC, how we can assist you. So different lenders will have different approval processes, interest rates, fees, and other different amounts of equity that they can go up to. And generally that's up to 80% as an industry standard, where we go up to 85, which is a lot different. Now, you want to read customer reviews and understand what their customer service is like, because this is really important. Okay, shop around, do your research, kick some tires, look it up and down, and see what's best for you. I personally like to call in and talk to someone who's real. You know, I take these calls all day long. I talk to a lot of clients, different scenarios, and it really helps me get a wider understanding of what's going on in different markets and different trades. So I love my job. It's really interesting to help these people the way I can, you know. So it's really important to do your research, and customer service is really, really crucial. So just be aware of that when you're going around. Now, speed, pre-approval time, and days to close. It's another important consideration. How long is it going to be for me to close and access this money? You know, what is my pre-approval turnaround? What documentation is going to be needed? What is the process, right? What is the process? I think that what we do at MBANC, we're really straightforward about this. We have a streamlined process. I have all, in-house underwriters, processors. I work directly with the principal bankers. You know, we're a family-owned and run operation, but one of the top non-QM banks in the world for what we do. So, I mean, I ask you to go ahead, look at our reviews, mbank.com. You'll see the MBANC on the icon up here. This is MBANC right here, MBANC.com, or you could go to my personal site, which is mbank.com/HI. I'm actually the Hawaii branch manager for MBANC. I work out of MBANC, but also do loans in 24 states throughout the nation. So I do have a lot of experience. Now, excuse me, take a sip of water. So speed, I talked a little bit about in the front, how important that consideration is. So for self-employed borrowers, the documents required and ways to verify income are another consideration, because how you're structured might be not just straight tax returns, right? Like you're going to have P&Ls, you get deposits a certain way, you have contracts that give you ACH payments. You're a 1099 employee earner, so excuse me, you're a 1099 earner, so you're a non-traditional income earner. So how do you go ahead and navigate that? Well, that's my job. That's where we specialize. That's what we do. So it's really important for you to go ahead and just touch base on that and understand that if you have a unique situation, please at least contact us and let us know how you're positioned, and then we could at least pull you up, let you know what we can and can't do, and definitely shake hands and be friends in the front. Okay, it's a no-brainer. It's a day-to-day operation for me. So there is no point in working with a lender or broker who does not specialize in lending to the self-employed borrowers. That's a really strong statement, and I like that that's put here, because it is. Now, I'm not knocking on mortgage brokers or other lending institutions, but again, I'll refer back to the point where I said I know really well what we do. and we specialize in this space. So when we specialize in this space, that means we are thought leaders in the process. We are the general in your transaction. We guide you, support you. There is paperwork that is required, but once you are done working with us and we close your deal and move forward, by all means, you might be that unicorn where you're all structured correctly moving in. But at the end of it, you'll see that how you can utilize the structure that we provide to go ahead and make lending 1,000,000 times easier for you in the future. And not only that, once you're structured with me, I have a master file. It's easy to work with you. It's just a matter of updating documents as we go. So that's kind of how important that is, to understand who you're working with, that they're a professional banker. Are they giving you a pre-approval without running your credit? Are they asking you about how your income works, where your deposits are coming from, where do they land? How do we source it? How do we adhere to the anti-money laundering laws, to compliance laws, to regulations, the NMLS? There's a million different things that us as a licensed banking professional need to adhere to. But again, the customer service is what I'm going to go back to, is having someone who knows how to navigate those programs to help you moving forward. Now, at MBANC as a whole, we have supported self-made borrowers with premier lending solutions since 2005. Self-employed clients can qualify for a second mortgage or a cash-out refinance using self-employed income. MBANC, we are a direct mortgage lender and the decision maker, meaning we will go ahead and take your file from the front to the back, understand it, and I don't have to go ahead and say, yes, you're approved, and then shop around town to see who will take this loan. Because you got to understand there's a risk in a scenario that I deal with quite a lot where people have worked with other lenders or other brokers and they're all good, they're in contract, their earnest money has gone hard, which means they have thousands upon thousands of dollars that is non-refundable at this point. They're held into a very lengthy contract to have accountability and a close date. Now, there's a bunch of different things that very experienced realtors will go ahead and put clauses in there for right of extensions and whatnot, not to get into that, but there's a lot of ways to look out for yourself prior to getting into contract. But what I was talking about was how these situations with people who come to me, and I'll just use an example. I have a self-employed borrower as a producer. He does amazing work. He's making over $400,000 a year, gross income through his business. And when it comes to it, he's working with a new build, so they have their in-house financing. They're all set up. Here he is. He's 6 days out from closing, and all of a sudden financing comes back and goes, hey, you're going to need a co-borrower. Wouldn't you want to know that in the front? Wouldn't you want to know your loan process in the front? What exactly do I need? Don't BS me and tell me, you're good, and put thousands down, and I need just these bank statements and just a couple things and you're good to go. A lot of people feel in the real estate industry that if you have a pre-approval, that it means you've actually been vetted to where the loan will work all the way through. Your income's figured out, your debt to income's figured out, your credit's figured out. There's no hiccups. If I tell you what, with my borrowers, if I need a cosigner, I'm going to tell them right in the front. We're going to pull that credit. We're going to look at your income. We're going to see how that all works and give you the no nonsense, how it's going to work from the front to the end. And I guide you all the way through. My team is amazing at doing that. And that's why we have such a high success rate and such excellent reviews, is that people know that we're just real people trying to help them out. Okay. And we're going to do that because we're professionals and we're professional bankers that help people from the front to the back, and maybe have a thought process that is not shared industry-wide, because, hey, you can either follow the sheep or you can be the shepherd and tell them where to go. I choose to be the shepherd, and I like to show people different avenues and show them different pastures that they can graze in, and I'll get off the sheep thing. But basically, it's really important to kind of see how important that is, Now, our average approval time with MBANC is just 17 days. So you Close quickly with our award-winning alternative mortgage programs, ideal for refinancing. Our experienced invested professionals will guide you step by step with the right mortgage solution for you. So mortgage programs we do bank statement loans, all right, requires no tax returns. 1099s require no tax returns. If you're self-employed, please go ahead and reach out to us. We're more than happy to help you. I do interest-only products. I have 40-year notes. We have a bunch of different tools in our tool belt in order to help you and assist you moving forward. If you're looking to buy an investment property and want to utilize a DSCR platform, which is a debt service cover ratio, which is a loan that uses the projected rent from the subject property to qualify you. So that's woo, a lot of talking. Forgive me for that, but that's basically where we're at on that. And we have a different, let me go ahead and bring this up here. So we do foreign nationals, please just go ahead and on this stream, I will put the link to this so that you can read through it for yourself. You can also see our different mortgage solutions that we have for bank statement jumbo, 1099 jumbo, rental income DSCR, interest only jumbo, close-end seconds, asset utilization, so on and so forth. And who we are, or actually our licenses. I'll go ahead and take you to our license page. These are all the states that we work in right here. And if you wanted to get an itemized lease or list, you can go ahead and see everywhere that we're licensed, which is an amazing aspect. I'm in this state. Can you lend there? Can we work with you? That's where it is. Now, about us, obviously, you're going to learn a little bit about the team, put a name to the face. I was actually in Hawaii when this picture was taken, so you won't see me there. But if you scroll down just a little bit, these are amazing people all right here I work with on a daily basis. Our sales team. And hey, there I am, Loan Officer Hawaii Branch Manager. So proof's in the pudding. You can always just apply directly through this apply today. And this will take you directly to my stepper where I will get your information and help you out. So just coming back to where we're at. Oh, sorry, not to forget the press. So we're in the press on a bunch of different things here. So you can learn a lot about our company. But what's important to you, what I was discussing today, are our blogs. Now, our blogs, we have so many success stories and different things on close-end second mortgages to ease the process to DSCR rental mortgage financing cash outs to interest-only refinance in Utah, jumbo loan, how does it make sense? Why would I do that? But we have a bunch of different options for you to get into, and the blogs are, I actually closed this property right here. This is an amazing property. You know what? Maybe I'll cover this next time, and we'll talk about this blog here. But definitely go ahead, contact me with anything that you have in the future. And I want to thank you for tuning into my live stream. I will be doing this again Saturday at the same time, which is 10 a.m. Pacific, or 10 a.m. Hawaii Standard Time, which would be 1 o'clock Pacific. And then again, 4 p.m. on Eastern Time. Sorry, I'm 6 hours behind. I'm based out of Hawaii. But I really want to thank you for coming down today. If you like this link, always you can click below. And if you have any questions, make sure to ask me, and I am more than happy to help you, all right? You have an amazing day.